Good evening. After quite a bit of mirth, which was, I think, long overdue, because the whole idea of these exercises are that you are all awake and energized, my job is made easier. I don't have to, or we don't have to be that creative to keep you awake, because there are only two known formula for keeping people awake in a conference after lunch. One is an activity which gets you up and running. Sometimes works, sometimes doesn't. The other one is putting AC on full blast, make you totally, thoroughly uncomfortable. Believe me, that works. So here we are, and in the final panel. Antony could not be with us. You all heard him in the pre-lunch session. He had to move off, otherwise he also was supposed to be part of the session, because we are going to talk about health insurance. So we do not have a specialized health insurance player, but at the same time we have players and people here who have pioneered health insurance right from 2000, 2001. So, in fact, Chola in general insurance, Gopalarathnam is here. From there, actually started with the first 10 lakh policy when all health insurance policies used to be 2 to 3 lakhs, and everyone thought 50,000 was good enough. So, in the interest of time, we are running short because we are standing between the wards and you. I'd like to start off by asking all of you, Gopal, Mahesh, Sreedhar, and Sanjay, free-flowing quick thoughts about how do you see, what are the new trends in 2019, or what are the new trends of 2019-20 that you see? Are there disruptions that you really see? And disruptions need not only come from fintechs or through technology. So what all do you see now? Let's start off with your impressions. Maybe we'll go around like this, Gopal.
See, firstly, the people have a basic tendency to avoid insurance, particularly in India. But I clearly see the need for health insurance being felt in a very significant manner. When the basic context is one of avoiding, itself is a very major trend. Because quite often people used to think that I'm quite healthy, nothing is going to happen to me. The moment you get into a hospital and you have to pay 50,000, 60,000, 1 lakh, and this happens to your near and dear ones, and it happens quite often, this has given rise to increased awareness. And I clearly see this awareness not only in the metros, but also in the Tier 3, Tier 4 towns. Even there, when you say health insurance, people are immediately nodding their head. That itself is a very major trend. And it's good for the people and their protection, and good for insurance companies. The second trend I am finding is, while the awareness is building up, also the need to take higher sum insured is also building up. What used to be difficult for selling 2 lakhs and 3 lakhs, sum insured, now 5 lakhs and 10 lakhs is becoming very easy. So, even for the affluent lot, 20, 25 lakhs is becoming a lot more easier. So, the second trend is that it is not, one need not assume that one has to sell only 2 lakhs and 3 lakhs sum insured. People are conscious that the healthcare costs are going up, and therefore the need to take higher sum insured is becoming the order of the day. It's not becoming very difficult to sell higher sum insured.
Also very significant. In fact, this is something very different from what we have been hearing the whole day, right? Insurance, people don't want to take it. But health insurance seems to be something which risk stares people at the face now. So the rising cost of healthcare is probably helping the health insurance industry. So that's interesting. So let's ask Mahesh. Mahesh, you're relatively newer player, 5 years now?
Almost 4 years.
Almost 4.5 years. So, and you've done, obviously, larger part of the business is GI, but in health, what do you see, and what would let you go and conquer the market?
No, I think I'll dwell on partly two parts of the discussion. One is what we're doing at Kotak, what we see, and then what are the trends we see globally. Gopal alluded to awareness. In fact, we talk about AI, blockchain, etc. There is an AI as well in insurance, what I would call the awareness and inertia problem. It's not artificial intelligence, because people have awareness issues, but people are aware also there's a serious inertia, as Gopal said, because people think that I'm immune, as long as it doesn't hit my backyard, I'm okay, So I think those two things need to be overcome significantly for us to probably have a tipping point in terms of reaching out and increasing the penetration of insurance. From our perspective, actually, we as a company probably at its infancy are about 30% health already. And the idea is to push it to close to 40%. And that's largely coming on the backdrop of being a bank-led insurer. In my limited experience of 4.5 years of insurance and maybe about 10 years of liability banking, I've realized that health insurance is actually an advisory product. It is not a product which can be consumed directly. It requires some amount of intervention. It can be through the telephone, it can be through a physical intervention, because customers would like to understand the product better. Whereas motorists become increasingly commoditized, I think health insurance requires serious counseling and effort, which is where we believe that the advisory role that bankers play is clearly panning out for us. So when an RM is able to speak to the customer, he's able to advise the customer. In fact, one of the things that we are propagating internally is that protection as a dialogue between the customer and the individual. You have managed wealth management. It's always been asset allocation, returns, risk, right? It's never been about protection.
That's right.
So I think the third dimension to financial advisory is actually protection, because unless you're able to protect your assets, you cannot do much. Thankfully, globally, this is panning out. If you look at some of the global international models like Oscar Insurance, which is a well-touted model in the last 5 years, I think their ability to do a lot of things through technology and through remote has been phenomenal. I think they have been able to offer doctor on call, they do telemedicine. What they have really done is that they have taken the advisory role a further step forward in terms of integrating with the value chain of health delivery, right? We must understand that we are only a part of the value chain. I come in to settle the claim, right? There have been two kinds of interventions globally which has happened. One is wellness, which is a great discovery model which India is trying to embrace. Second is the intervention in terms of the health management itself. And in India, you have companies like Healthify, you have companies like PureFit, you've got companies which are manufacturing wearables and things like that. I think finally the customer is looking for one total solution, holistic solution. So we need to really integrate all this as insurers and people who manufacture these devices. Thankfully, the regulator has opened up the sandbox, and I'm sure that many of us have filed certain products and solutions. So I think the customer is looking for solutions. Then more and more, that's a trend I see, and globally it's working. And when this current level of millennials reach 35, 40, I see a huge tipping point, because they are used to consuming products through the web, through the mobile, while the 45-year-olds are also embracing it. They are probably late adopters. The early adopters, when they start feeling the need for insurance, which will happen probably in about 5 years' time, I think there will be a huge tipping point in terms of how they consume insurance.
Interesting, and I think we will come back to you as a continuation to the point of whole solutions, because it has also an impact on the value it creates and the price of that. But yes, this is probably already on us. It's palpable, the change is palpable. So moving on to Sreedhar, it's interesting that Mahesh said I used to be a wealth manager, because as we move on to RSA, Sreedhar has, how long have you been there, Sreedhar?
I have been there from inception to
inception, right? So let me get everyone onto a little real secret, which even people who probably work very closely with me do not know, that when I used to be in Standard Chartered Bank in the year 1999, tied up as a corporate agent of RSA, and I was trained and certified, IRDA certification those days under RSA sponsorship. So I passed the exam and qualified to sell Sundaram non-life insurance in bank assurance, which didn't have a regulation. So the innovation that RSA brought in was the moment they came in, they had 8 bank tie-ups, Citibank, Standard Chartered, you name it. They had the best banks because they went to the banks first. And there was a beautiful wraparound created for customers, which sold very well. So these are disruptions. I mean, these are pre-technology, pre-app, pre-mobile disruptions. So Sreedhar, how do you see the market?
I think year 2000, the disruption was cashless. We were the first company to offer cashless service for Medicaid.
That's right, we've trained on that.
But I think in our experience is in 2015, when we launched the Lifeline product, which is the health indemnity product, we realized that the healthcare cost is going up substantially. And the upper middle class, particularly the salaried class, were really scared about the healthcare cost. So we said we will not launch a plain vanilla product. We said we will offer from 2 lakhs to 1.5 crores. We have 3 schemes, Classic, Supreme and Elite. But interestingly, we said such a high value cover cannot be given without doing medical underwriting. So we were very, very worried when we launched the scheme in 2015, whether the intermediaries, the end customer will offer himself for medical examination.
That's right.
So there were skeptics within the company, but we said we will pursue that because ultimately the viability of the product will hinge on the quality of customers and the risk profile of the customers. Interestingly, this disruption has happened because today we do around 5,000 medical underwriting every month, which is tele-underwriting, and some of them is PPMC, where you undergo the medical test itself. And today what we have really experienced as a disruption is customer says, look, I don't mind paying you the premium, but give me a seamless, hassle-free service in the event of a claim. I would like to have a boarding pass, like I check into an aircraft, I want to check into a hospital if there is a serious emergency. And I don't want hassle. People are not willing to wait for 48 hours, 24 hours. They want approval. They want approval on hand through a QR code. That is the kind of disruption we are seeing. So, interestingly, the medical underwriting that we introduced, today, 1/3 of the customers pass through the test, 1/3 of the customers come with riders, co-payment clause or loading, and 1/3 of them is rejected. But what we have essentially seen is we will have less problems in the event of a claim because we have already done the medical underwriting. This is a very, very important and serious disruption in our business, particularly in the health segment, because here the regulatory environment has changed. Today we have to offer lifelong guaranteed renewal. If you have to give lifelong guaranteed renewal, you need to be able to reprice it at right time. And repricing is not your own, in your hands, it's also linked to what the market can absorb. And therefore it is very important that this is a very important disruption. And one other important disruption is this service. The kind of service that you will have to offer at the time of issuing a policy, at the time of managing a claim, is undergoing a sea change. And technology, thanks to digital, etc., this is going to make a big change in terms of customer experience in the event of a claim. And of course, I don't see AI and big data, etc., coming in a big way in terms of underwriting decisions for health business at the moment. Because you need database, you need credible database, you need multiple stakeholders to really contribute to the database before you can make a proper decision out of that. So that is a bit far away, but I think in terms of service, in terms of coverage, seamless delivery of product, etc., there's a big change.
Oh, fantastic. In fact, this is something which has been plaguing the industry because for the first 15 years of the industry, even life or health, people have been, not only customers who have been resisting going for a checkup, it's the distributions and distributors who used to also resist and sell under, because the sort of a feeling or impression was that this is like something to be avoided because it slows down the sale, but whereas it hastens the claim. And in a claim-intensive product like health, I think it's a welcome change and great if it pervades. So Sanjay, who's the dominant player in employee benefits, so there's a different view, so not just individual or distribution, but it's all about also packaging. Like Mahesh said, packaging a lot of benefits together in employee benefits, for which Marsh is well known for. So Sanjay, what do you see with 1,000+ corporates that you handle? Your own micro universe is a large universe by itself. What trends do you see?
Thanks, Joydeep. It's interesting to see conversation on health insurance in the same breath. I think I'll take a pause and say that the health insurance business on a retail insurance is very different from the corporate business. So we handle close to 7 million lives, touching 4,000 corporates in India, with the largest aggregation of group business. And I think the insurance industry on the group health, a significant part of the business is cashless. And that has given a very different user experience as soon as the insurance is cashless. So most of the insurance what the consumers experience is reimbursement. And there, the dissonance and the doubt is there many times in the minds of the customer whether I'll get my claim. And the cashless is one big change in the group experience. The second is the biggest dispute on the health insurance from a customer's perspective, because that's what we do for a living, we represent the customer, is around the pre-existing disease which is there in the retail insurance, it's not allowed, and in the group it is allowed. So as soon as you have the two components of pre-existing disease allowed and you have cashless, that goes through a very different experience from a consumer perspective. Let's look at India, and we do every year annual survey of the entire corporate world in India, and these are very, very large surveys. And we find in our survey that almost 95% of the corporates, I'm talking about even including SMEs, do have group health cover for their employees. And there's no law. There's a law for provident fund, there's a law for gratuity. In spite of an absence of law, the value delivered by the insurance market on this space for the consumer is so high that it is so widely prevalent that we don't realize. So that's something which is important to get some facts right, that it is very different from group versus this. In terms of the market trends, what is the few big things? I would say the co-pay on the claim where the individual user of the group has a skin in the game creates a very different responsible outcome. Though it has been talked about for last 10 years, but the total uptake as per our latest survey still is around 35 to 40%. I think that needs to go up. There has to be skin in the game for the insured, the ultimate insured, which creates a responsible consumerism in the health. Right. It's a win-win for all parties. So that's one very important, that trend needs to be pushed, which was in the low of 10% 10 years back, and it has moved only to 35-40%, but this needs to go up. That's one. A very rapid change which we have seen in the last 2-3 years and is growing at a phenomenal pace is the emergence of top-up insurance on critical illness in these group programs. That's a very interesting play that has come in a big way. And some of the things which are emerging, I would say more as new things, but not at a mass scale. We are seeing some of the buyers of these insurance are including heavily discounted diagnostic programs as part of the health cover to create value. There's a lot of innovation happening on this whole space. HR partners are using these as almost like an HR strategies on various aspects from mental health, from diversity, from inclusion. So there's a lot going on that whole space. And I'll not get into all of this. I think the big trend which is of the future, which we need to watch out, and we have seen only around 25 corporates in such a large portfolio which have moved in, but I expect in the next couple of years, the largest corporates will move into this as a matter of economics and the compulsion, is that the Indian market has been defined benefits. That is, all the employees gets a cover of say 3 lakhs to 5 lakhs. That's moving into a defined contribution that the employees gets an allocation of amount, which is 10,000 rupees to 15,000 depending on the seniority, and then the employees choose whether he wants to allocate for personal accident or life or health. I think that shift of creating choice, creating value and perception to the end consumer, that's coming in the market. So the top 25 customers we have done in the last 2-3 years, but we see this demand is very rapid on the change from defined program to flexible benefits. So I think these are very interesting innovation for the market, for the consumer, and I can go on, but I think these are the big changes. And one observation which we don't talk about is, I remember 15 years back in conferences and 10 years back, there was almost an assumption that when you do an operation with the insurance policy, is it more costly through insurance or is it without that? I would like to share that our data shows consistently that insurance is now cheaper than going direct to the hospital. And that is a game changer for the future of the market. Yeah. If insurance is considered to be a better negotiated price to access the hospitals, that will also change the consumer experience besides the cashless.
No doubt, and it was obviously a matter of time because it's the power of the payer and provider, the balance,
yes.
Right? And since the payers were very small, then they're hardly 5% of the whole market, the power lay with the provider. So interesting, and one of the most significant things that I take on from here, Sanjay, is that if 95% people are actually including this in our...
On the employees.
On the employee benefits, it's also a matter which, in another session, we were talking about NPS. Pension. Pension is the other employee benefit which is not compulsory. In India, India is sitting on a big time bomb. It is insufficiently funded or even contributed.
Provident fund is.
Yeah, provident fund is, and gratuity is, but pension is not. And this is, so the whole idea is something which is compulsory works. Well, this is not compulsory, it seems to be working. So this has to be also moved to the unorganized sector, which is the largest part of India's employment. So interesting trends, I think. So health insurance doesn't seem to be, like insurance, right? And when we speak about all of these, because it has to deal with the provider, it has to deal with third party, it has to deal with the overall benefits, it has to deal with, a pull factor which is now coming in, the overall solutions, things to, so there, it seems to be actually establishing itself as the separate sector as it has been meant out to be. So that's something I think which will spur the growth of health insurance. Let's come to the other aspect of this discussion. Now, we all know, and I'm sure we have talked about this many times, that Indian health insurance rates are, let's say, way below the US health insurance rates or the UK, the overall allocations. Look at the government spend. And of course, this Ayushman Bharat is trying to cover the lower end. And sort of these kind of, as cover goes, as more and more people get covered, healthcare costs also with scale should come down. But still, in most, you can distributors speak or customers speak or voice of consumer, we still hear the health insurance, can it be cheaper? Why do we hear that, and is it true? If it is not, how do we deal with it? So maybe can we sort of mix it up and start with Sreedhar, and then, yeah.
I think when we talk of affordability...
So Sreedhar, we talk about affordability, and maybe you can also look at bring out your idea of the buyer behavior in this. Yeah.
See, when we talk of affordability of health insurance, particularly to the retail customers, price is the only thing that comes to the mind. And we all know pretty well India is one of the lowest priced kind of health insurance business. And typically, if you are talking of affordable customer segment, which is actually majorly impacted due to affordability, is the one which is just above the below poverty line. The below poverty line is covered by the Prime Minister's scheme, fine. That is around 50 crore of the population. Then you have a layer above that, which is the unorganized sector, right? Where you are talking of shopkeepers, traders, etc., who are not in the organized salaried kind of employment. This category of unorganized sector is the most critical category when it comes to affordable health insurance. Unfortunately, if the price is already low per lakh of sum insured, and if you want to tweak the price further, or if you want to make the price affordable, you only have to tweak the terms of the cover. Because we are all in the business where return on capital is very important. It has to be sustainable. Whatever we do has to be sustainable. And if you try to manage the coverage through co-payment clause, sublimits, this, that, etc. for the affordable health insurance, then it hurts the interest of the customers. Because these are clearly the customers who cannot even afford to chip in the event of a claim. Because in RSBY, which is the Government of India scheme prior to this scheme that was launched recently, the sum insured was 30,000 rupees. I know many cases in villages where people were not able to afford the conveyance cost of moving from their village to the nearest hospital, and therefore they ignored the treatment. Even though the coverage was there, it was free. If that is the kind of affordability we are talking, there is an inherent conflict in what we are saying. So in my view, if affordability has to be ensured, then you need to, all the stakeholders have to contribute. I can question why GST at 18%. Right? If you want to make it affordable, reduce the GST for affordable health insurance. I can say, why don't you give more income tax relief to make it attractive for the customers? I can also say, why do you make bullet payment? Make ease of, it could be a daily premium payment, it could be a weekly premium payment. But one other thing is, this class of customers, we have the cost of distribution is huge. You can't access a trader, shopkeeper like that. So if you build the cost of distribution to the premium, again it becomes unaffordable.
Yeah.
So you have to balance everything to make sure that everyone chips in. The product becomes, gives a decent cover to the customer. The price is decent. The service that you give is also on the expected lines. If all three has to be achieved, I think government, regulator, insurance company and the customer, everyone has to collaborate to see how we can bring this concoction which will work with the customer.
So we heard from the Ayushman Bharat presentation in the morning that the bottom 40% are being taken care of with the government, roughly, a round figure. Top 20% is being taken care of, and there's the middle 40, which is left out, and that's probably the next challenge. So, Mahesh, you want to add on to it?
Yeah, I would just make two small points. I think on the affordability side, while I agree totally with whatever Sreedhar has said, I think one of the problems of perceived affordability also is what we're doing on the employee benefits versus the retail customer. We all know that group insurance scheme, everybody sells it at a ridiculous price. You know? Like the average claims ratio is 120, 125%, right? Therefore, the corporate customer is being wooed and the retail customer is shortchanged. You know? So I think that needs to correct first. I would be happy if the regulator actually asked people to publish the claims ratio separately for group and separately for retail. I think that will come out very clearly as to what kind of subsidy, right? In this room, I can say that I don't do the Kotak Mahindra Bank group insurance. Because honestly, somebody is giving a gift check to Kotak Mahindra Bank every year. You know? So why should I stop it from happening? You know? So therefore, I think there is a certain scope of affordability there, right? Some affordability. The bigger problem, I would say, is the Indian psyche. You know? When we give something, we want something in return.
Right.
The problem in health insurance is that the claims frequency is anywhere between 8 to 12% on the retail side, definitely. You know? So if it's an 8 to 12% frequency product, and India is a young country, the guy pays the premium, he doesn't get anything back. You know? So therefore, you have a lot of dropouts happening. By the second year, third year, he says, "Yaar, 3 saal premium bhara, mere ko kuch fayda hi nahi hua." You know? So he doesn't realize that he's buying a cover, and if he's not using it, it's to his benefit. You know?
That's right.
But the Indian psyche works like that. I think that's where we need to probably increase the awareness and actually tell the customer, consistently speak about the cases where the affordability has been an issue and how really customers get absolutely financially devastated if there's a claim. You know? So I think we got to probably dwell on that as well. If it's an 8 to 10% frequency, you're going to have this problem for some time.
And maybe your early idea of offering, or not idea, it's a reality of offering a whole solution. Where
correct. So he gets a benefit. So he pays 5,000 rupees premium, but he also gets something benefit to stay healthy. You know? So that's where
perceives the
value goes up, saying, okay, I'm healthy, I also get something. I get a voucher for something, I get free health checkup. I'm getting something back, even though I'm healthy, I'm not using the plan. You know?
Exactly. So usage kind of, you know, patterns have to be seen. So I'll interested to move on. So Gopal and Sanjay. So I'll pose the reverse question to you now. So employee benefits and corporates are penetrated, but we know that for the insurer, it is not profit making. So how do you think? So see, anything which is unstable does not continue. In fact, Mahesh talks about 120% loss ratio. It used to be 180. It used to be 200 when, let's say, the tariffs were there in general insurance market. However, as tariffs have gone, the cushions have gone, and gradually, every year we see it coming down. But what do you see as the future of employee benefit insurance, which so-called runs at 120? How will it correct?
See, anything beyond, let's say, 75-80% claim ratio is unsustainable for insurance companies. But in a market where there are 25 plus companies, there will always be 4 or 5 who would throw caution to the wind and then still go and give the pricing to the customer. So, in a way, this will continue for a while. But having said that, Sanjay did mention about one trend, which is the corporate not getting into the nitty-gritty of how the insurance is structured. On the other hand, gives some kind of a benefit to the employee, saying that, look, I will give 5,000 rupees per employee for this grade, 10,000 rupees for this grade, 20,000 rupees for this grade, and you choose whatever you want. That is the best way to do. In fact, one of our group companies did it some 15 years back. So we were insuring them as a group health policy at that time. So we went and complained to our chairman saying that you can't do it. I am now giving insurance to them. Now they are doing allocation to employees and they may even go out of the insurance net. But it turned out that we had an opportunity to then customize for the allocated amount to the employee relevant insurance for that employee, because you had a similar retail products for that affordable range.
Sure.
So in my view, that is a long-term trend which balances the corporates need to provide some kind of a welfare benefit for the employees, also for the insurance companies to offer for the target premium the appropriate cover, appropriate sum insurance, things like that. It's a good balancing role, which I'm happy to say that he has done about 25 corporates. But if this message is taken through completely, I'm sure it will.
It will. And it's sort of a mature way of doing it. And also, I think treating the
See,
employee
ultimately,
with respect.
business can survive, business can sustain.
Yeah,
Only if it is operating on a win-win philosophy.
that's right.
The moment it is win-lose, whether it is a customer, whether it is an intermediary, whether it is an insurer, doesn't sustain. People will come with a big bang and then get out in the same way they have come. So it is important that all the, like Sreedhar was mentioning, all the stakeholders in a business will have to position the business on a win-win philosophy, rather than a win-lose or lose-win philosophy.
Good. Interesting. And so Sanjay, the last bit of the question, and I'm going to take you away from your business. See, overall, we might see, or people might see catastrophic healthcare or health bills to hospital, somebody, and those are anecdotal, say 3 lakh, 5 lakh, 20 lakh, 35 lakh, 40 lakh. But it's also true that if you even if you leave out this Ayushman and all, the average hospital spend in India per hospitalization is still less than 50,000 rupees, average, which means there are a lot of them which are 10, 15,000, and we heard a bit about that in earlier sessions. So while average is small, there are, of course, extremes. So healthcare, at the same time, healthcare costs are rising. And there is pressure of premium to come down from everywhere. How do you see, as a market player, how does the entire thing panning out? Where is the right balance of getting a pricing? Because it's also very important for the younger generation. We heard, again, I'm just trying to thread together earlier sessions. How do you get the younger people who feel nothing is going to happen to them, or their premium is going to sort of subsidize the older people who are in it for a lifetime? So how do we manage these dichotomies? What do you think? In as a whole, I mean, not necessarily as an employee benefit.
So the Indian insurance on the health largely covers, not largely, I would say 99%, it's about hospital bills.
That's right.
It's not outside the hospital. So that is one aspect which we realize, that we all look at, hey, insurer, you reduce the cost, but insurer is essentially passing the entire premium to the hospital. So the cost part essentially is, we need to look at what happens at the hospital. Insurance is regulated, but hospitals are not. So this is one area I think that has been debated a lot, but for whatever reasons, that has not moved forward. The dialogue on what happens when certain diagnostics are done and certain symptoms are found, what is the next medical treatment process which needs to be followed, they are many times not consistent, and that causes a big cost outcome change for the customers. So these things are heavily regulated in most markets, and I think with regard to getting the confidence of insurance market on hospitals and the end consumers' confidence on hospitals and the whole chain, the regulation of the hospital processes is a very, very important component to drive confidence. There is reasonable amount of supply coming in mid-sized hospitals in many parts, but at the top end, in spite of the supply coming, the demand is still much higher. So adequate competition on the hospital also will help the insurance cost and also the end consumer. The third part is, we have seen there is competition on the insurance premium side, but as soon as you step into the Western world, you can get very different outcomes in terms of network pricing depending on how you structure your networks.
Yes.
So we do not still have what is the level of discounts you are getting from different hospitals as the core source of competition among the TPAs. So that has to emerge. The TPAs needs to compete on delivering a superior value. I think when all parts in the chain start delivering value, the hospitals, the TPA, then the insurance company can deliver the value. So I think that's one of the cost part. I think that all these parts needs to be moved.
Yeah.
And I think there's always a room to deliver more for the consumers, I would like to say. But it has to be done through the whole chain. That's one. With regard to the new millennials and where things are in terms of the trend, I think we have to see a larger integration of wellness, the wearables, the lifestyle to be brought into the whole health game. If you are active and you are taking care of yourself, should you have a lower deductible when the claim happens? If you are not, I think those kinds of things have to come and are coming in a limited way, is a one big part. The second big part is, can we get the OPD expenses into the insurance, which is a huge opportunity and has happened in most markets. And also is the whole diagnostic part, how do we bring in? I think there are many of these big answers to be done, OPD, diagnostic, and managing the whole hospital chain. I think these are the big areas of reform in the future where we all need to work together.
Great thoughts. And OPD, by the way, for people who are uninitiated, is about 65% of the entire medical spend of India. And the other hospitalization is only 35, out of which some part is insured. So great thoughts and wonderful inputs. Hospital, the whole moving parts, or so many moving parts. Health insurance is the most complex of all because of the moving parts. Overall, it's just not the insurance industry which can reform it, but it requires all the parts to come together. With that hope and with that vision, we close the session. So we don't really have time for question and answers because we are right into the middle of the award function time, and we'll close it here. Any questions, you feel free to ask one-on-one as the eminent people here are going to continue in the room. Thank you very much.